Hello, I'm Peter Towers, Managing Director of ESS BIZTOOLS. Welcome to Accountant's Minute. Would you like to be able to turn a $2,000 a year client into a $25,000 client? Well, the Australian government has introduced legislation to assist innovative companies to be able to raise capital. This legislation, which commenced operations from the 1st of July 2016, is called the Early Stage Innovation Company. Now, an early stage innovation company will be normally a small medium enterprise, an inventor who at this stage might not even have a company, or an entrepreneur. At present, most of these businesses or companies, and some will not even be companies at this stage, will probably be very small, and if they are paying accountants for professional services, and some of them will not be doing even that at this stage, the fees are probably in the vicinity of $2,000. Companies which aspire to be an early stage innovation company will be able to raise capital from investors. The investors will receive attractive taxation benefits. They'll receive a 20% tax offset on their investment up to a maximum of $200,000 for a sophisticated investor and $10,000 for a retail investor. And they will also receive a capital gains tax exemption from the end of the first 12 months of their shareholding until the end of the 9th year of their shareholding. The vast majority of these companies will not have the internal expertise to enable them to successfully navigate the requirements to be deemed to be an early stage innovation company. This is not just a matter of ticking the box or answering yes to various questions. Full supporting evidence will have to be obtained and appropriately filed so that it is available for submission to potential investors and ultimately to the Australian Taxation Office and Oz Industries, who are the final arbitrators as to whether a company meets the requirements to be an ESIC. So I've told you what's in it for the investors. They get some taxation advantages. What's in it for the companies? Well, they're able to raise money from a group of investors who are trying to obtain a larger or better taxation benefit than what they would normally have been entitled to. And the companies will also be able to avoid the restrictions contained within Section 708 of the Corporations Code, which at this stage says that the maximum that a company can raise in a 12-month period when it has not issued a prospectus that has been approved by ASIC is $2 million, so they can exceed the $2 million. And they were currently under Section 708, they are restricted to 20 investors in that 12-month period. Well, they can exceed that. They could in fact go up to 50, which is the limit for a proprietary company. So in the accreditation process for ESIC, the company has to satisfy 2 out of 3 tests. The first test, which we've called the Provisional Test, because the government didn't give it a name as such, looks at the age of the company, which in the main needs to be under 3 years old, although there are some exemptions for companies up to 6 years of age. Looks at the expenditure that the company has incurred in the previous year and the income the company earned in the previous year, and asks whether the company is registered on a stock exchange anywhere in the world. If it is, unfortunately, they are not going to be eligible for ESIC. The Gateway Test has 7 subjects that the company can earn points, and the attempt to do so is to earn 100 points or more from these 7 subjects. And those subjects include items like research and development expenditure, whether the company's participated in an accelerating commercialisation grant program, whether the company has already raised $50,000 or more from arm's length investors. The principles-based test is where a company has to go to if it was unsuccessful in accumulating 100 points under the gateway test. There are 5 questions and these all need to be answered yes. However, full supporting evidence needs to be submitted as part of the answering of these questions process. These questions are very similar to the questions that are asked in accelerating commercialisation grant application, and in that grant program, Oz Industry makes provision for a 500-word response for each of those questions. So I don't believe just answering yes and a few lines is going to be sufficient information. So in the main, companies are going to need assistance from accountants and advisors and other professionals to be able to get through this process. We estimate that the fee for the early stage innovation company work that you could charge would be in the vicinity of $1,200 plus GST to $2,200 plus GST. But the ESIC accreditation process is only the beginning. No investor is going to invest $10,000, $20,000, $50,000, $1 million into a company just on the basis that they have achieved the ESIC accreditation. Companies are then going to have to go into the investment readiness phase, market research, budgets, cash flow forecasts, business plan, information memorandum, assistance in making an investment presentation to an investor group. These are the real activities that these companies will then have to be involved in. And they will most certainly need assistance from accountants and advisors to be able to put together these very important documents which tell them where they are planning to take this company, what they are going to do with the money they're trying to raise over the next 3 years. In our opinion, these services will generate fees of between $23,000 and $40,000 depending on the complexity of the activities that the company is going to be involved in. But there's more. At the end of this process, and the company's raised, say, $1 million from 40 investors, most of these companies are then going to require the services of an internal accountant, chief financial officer. Most of them will not be able to afford to employ a full-time CFO, and they probably won't have enough work for a quality CFO. So they'll be very interested to talk to their accountants' advisors about providing a virtual CFO service. And the other very important role is these companies are obviously going to have to form boards of directors, and they'll be looking for an accountant to be on their board, a finance director. So a finance director role is also a real possibility for the companies that you have assisted to go through this ESIC process. And there's roles like company secretary, internal auditor, and in fact, if you want to go down a different stream altogether, you could put your hand up to be the auditor for one of these companies if you have the appropriate registrations. And just remember, at this stage, no one is imposing any rules on who can do this sort of work. ASIC's not involved, and neither is the Australian Taxation Office. So what this ESIC legislation introduced by the Australian government has done is enabled accountants and advisors to introduce some new income streams. So just as some of you are worried about the effects of standard business reporting being introduced by the Australian Taxation Office, along comes another segment of Australian government legislation which we believe will work very nicely for accountants and advisors. So the new income streams are going to be the ESIC due diligence self-assessment process that I've just talked about, the assisting investors to decide whether they wish to avail themselves of the opportunities of obtaining the tax offset and the capital gains tax exemption, and the ongoing business advisory services work that I've just referred to, virtual CFO service, finance director, company secretary type work for these companies. This is how you will have the opportunity of transforming a $2,000 per annum client into a $25,000 per annum client. And it won't just happen in 1 year if you are proactive in offering your services to this new emerging class of companies that the government expects thousands of companies to try to take advantage of over the next 12 months. This opportunity is not going to last forever, so you need to get yourself organised now to be able to promote that you are offering these services to your clients and to your prospects. ESS BIZTOOLS has developed a full product service to assist you to deliver these type of services as part of the ESIC determination process. And we are presenting a special webinar outlining the step-by-step process of this work going from $2,000 to $25,000 per client on Wednesday the 12th of October at 11 a.m. Australian Eastern Standard Time and 12 noon Australian Eastern Daylight Savings Time. Yes, daylight savings just about to start again, and we're going to have these extra time zones around Australia. Creates great fun when you're running webinars to go around the whole of Australia. So that's the opportunity you have. You can subscribe to our product for only $299, including GST, for a 12-month, 24/7 per office access to the ESS ESIC product package. I look forward to talking to you at our special webinar on Wednesday the 12th of October. If you have any particular queries or you'd like to access the ESIC product package now, all you need to do is go to www.essbasip.com.au. Have a wonderful day. Goodbye.